Okay, so now let's try to understand about bank reconciliation and what does it mean. So basically, bank reconciliation is a situation where the books of accounts of the company should tally with the books of bank, and there may be certain reasons of differences between books and the bank balance. So let's try to understand this through an example, and then we will be going through the textbook concept. So there is a consulting company who maintains checking account at Citibank. So the account of the company is in Citibank. At the end of June, the company is preparing its monthly bank reconciliation. Now, in the books, the balance as on June 30th, as per the company's record, is $10,000. But in the bank statement, the balance as on 30th June is $11,200. So there is a difference of $1,200 here. Now the company receives the following information from the bank statement. Company see that bank has done charges of $50. Now that is not recorded in the company's books of accounts. Also, a customer's check for $400 was returned NSF. NSF is the non-sufficient fund. So basically, a customer has given you the check and you deposited that check. After depositing, there was non-sufficient fund. So that got dishonored or bounced, I can say. And the third situation is like bank collected a note receivable of $1,000 plus interest of $40 directly deposited. So one customer has directly deposited the note receivable, which is like your debtors, of $1,000 plus an interest of $40, of which you are not aware. Now what will happen in this situation? So we will be looking at firstly the books balance for the company. So we can say that the company is having a balance of $10,000 to start with, as you can see here. Now after that, we know that bank has done a charges of $50, right? So what I need to tell you that if the bank has done these charges of $50, you are not aware that these charges have been incurred. So you need to reduce those $50 from your I can say books, right? So you have done that. Similarly, here a customer check for $400 was returned. So it's like in your books, when the customer has given you this check and you deposited this 400 into the bank, you thought in your books that your balance will increase by 400, and you have done that thing in your books of accounts. But right now this has become dishonored, so this money should not be showing in your books of accounts, so you should be reducing that as well here. Similarly, here $1,000 plus $40, this $1,040 is still not in your books because you were not aware about it. So what you will be doing, you will be adding this $1,040 here. So effectively you will be saying this $10,590 is my adjusted book balance, or you can call it as a true book balance, because this is the final balance which you are having, and this needs to be used. So these are three examples here. Now uh, in the bank, what will happen? In the bank book, they will be doing the certain adjustments. What adjustments they will be doing? So let's see. The bank balance was 11,200 here, so you can say 11,200. Now right now, you know that one second, within the bank there is the outstanding checks of $1,200. So if I go here, uh, I can see, okay, so that was not covered in the printing, but let me write the fourth bullet point here and the fifth bullet point for your reference, because this was not captured in the printing. So let me just correct it, that there was outstanding checks and deposit in transit. So let me write as outstanding check, and next one was deposit in transit. Okay, so outstanding check was $1,200 and deposit in transit 590. So this was $1,200 and this was 590. Okay, so now let's try to understand these, what are these two items. So when you say that there are some outstanding checks, so outstanding checks meaning what? Within the bank you have given the check to your vendor, and now the payment should get reduced from your bank account once vendor deposit those checks into the bank. But right now if we say outstanding checks, meaning the vendor has not got those deposited and withdrawn, so this $1200 is still sitting there. So what you will be doing, you will be reducing that, because this will reduce your balance. So this 1200 has been reduced from here. Similarly, there is a deposit in transit of $590, which means like it has not been shown into the bank balance right now, but it will be shown through some means. So this should be added to the deposit in transit here. So this is 590. So if we do these calculation and these adjustments here, finally we will be getting our adjusted bank balance, or what we call as true bank balance, of 10,590, which is matching with our books of accounts here. Okay, so I will give you one easier way to just calculate if something needs to be added or something needs to be reduced once we go through the textbook concept. So let's see the textbook concept first. So what the textbook says, that in a simple bank reconciliation, our goal is to make sure that the company's book balance and the bank's bank balance match to a common true balance, because that is the true balance which we will be showing into our books of accounts. The true balance is shown on the balance sheet as cash and cash equivalents, because that is the effective cash you have into your bank account. Now step 1, we do the adjustment in the book balance. So what we do, we start with the cash balance in your company's books of accounts, what we started here in the company's books of accounts, and then we adjust for the items the bank recorded but the company has not recorded. So this is an important thing. Whatever reconciling items are there, you need to take only those which the bank has recorded but the company has not recorded, which is like bank charges, fees for printing. There are some bounce check which bank has recorded but you are not aware. There are notes collected by bank on behalf of the company, so bank has done that but you are also not aware about that, or any other bank charges or credits. Once you are done with that, these adjustments, after that you call that number as the adjusted book balance or the true balance, because that is the true balance which you need to show into your books of account. Then after, we need to adjust the bank balance. So finally what we do for that, we start with the bank balance from the bank statement. So here we started with the bank balance as per the bank statement, and then we need to adjust for timing differences, such like outstanding checks. These are checks issued but not yet cleared by the bank. This is the timing difference, right? Bank has not recorded it right now. Similarly, deposit in transit, company recorded but the bank has not yet shown them. Why? Because the company had said that okay, these are my deposits into the bank, but the timing difference due to different dates may be there. So after this adjustment, the bank balance should match the true balance which we saw above. So once we are done with this, let me just show you another way to calculate if something needs to be added or reduced here. So for that, let's go through the items again here. So whenever you need to calculate your true balance, you need to write on the left your books balance, and on the right you need to write your bank balance. Okay, and now let's see the first item. You can see the company received the following information from the bank statement, that bank has done the charges of 50. So what it has impacted, you can say it has reduced my bank balance here, right? Now here you need to write something so that both of these gets matched with each other. So what you will be writing, you will be writing here is $50. If I write negative 50 here, so what will happen, both of them will become negative 50 and these will match. So whatever item you wrote here to get it matched, that item needs to be shown here. So you just need to reduce these bank service charges of $50 here. Similarly, If we go to the next item, which is like a customer's check for 400 was returned NSF, which is like there was non-sufficient fund, so this 400 got returned. This was dishonored. So when this got dishonored, what will happen? You will simply say this has got dishonored, so this has reduced your bank balance, because bank initially has deposited this into your account, and now this they will be reducing it. So again, if you match both of them, what you will write on here left? You will be saying to match both of them, we will be reducing this 400 from here, so this will become negative 400 and this will become negative 400 here, and both will match. So we have reduced it. Let's see the third situation or the third example, wherein it's written as bank collected note receivable of 1000 plus $40. So what you will be saying, within bank this is showing $1040 as positive number, and you can do the changes here only. What you need to write here to match both of them? You will be saying I need to write it as $1040. And when you will say the effective impact of this $1040, and this is also $1040, and what will happen? These both of them will get matched, so you will be adding this $1040 here. So that will give you the true balance, and all of these three transactions have been done into the bank. So what you were saying in your first step, we need to adjust the book balance based upon all the transactions which are recorded in bank but not in the books. So this was the first step. Now within second step, what we need to do in the second step, we need to just, instead of writing books here first, we will be writing bank balance here first. So we will be writing bank here and we will be writing books here. Okay, why I am doing this? Because earlier I was starting from the balance as per books, so I started with here books, but now in the second step I will start with the bank, so I am writing and starting with bank here. Okay, now let's see the impact of both of them. There is an outstanding check of $1200 here. Now what does this outstanding check do? Simply this outstanding check is like the vendor has not encashed it, but you have reduced it from your books of accounts. So what you have done in your books of accounts, you have reduced this $1200. To match both of them, what you will be doing in the bank here, you will say I will reduce it 1200 from here as well. So finally this 1200 and this 1200 will match with each other. So you can see this 1200 has been reduced from here. After that, deposit in transit of $590. What does this mean? So deposit in transit means that in your books of accounts you have added this $590 because you are going to get that money, but in the bank this not showing right now. So what you will be doing here, you will be saying I will be adding $590 here, making both of these numbers as 590, and here as well 590. So you will be adding this 590 here as a deposit in transit, and finally both of your true balance will be matching with each other.